Welcome to Investors Insights. Our topic today is markets, elections, and China. Think about that combination. And here we are just 4 weeks away, roughly, from starting the 2023 year. And there's a lot of activity going on, and we want to help bring you information that ties things together in relation to your portfolios and your financial blueprint. Had a great discussion this morning with my colleagues, Trey Booth and Ty Miller. And we're looking forward to sharing information regarding our topic, markets, elections in China. Trey, how do you come up with that? But over the weekend, China gave us a surprise, right?
Yeah, that's right, Greg. Over the weekend, I was following the data on Black Friday and the holiday shopping, because that's usually the biggest data point. And, our dreams of being prepared for this morning kind of were dashed with news over the weekend and of China, major China protests across the country against COVID lockdowns and against negative working conditions. That's really riled Asian markets, and it really has taken a hit on sectors of our market. Indirectly, our entire ecosystem is somewhat connected to China. It's a very large exporter. It's a very large part of our supply chain. But there's certain sectors that are directly impacted. We're seeing that specific companies that have a large presence in China are being hurt today. The energy market is down because the thought is of these protests. They're protesting the lockdowns and they're protesting the negative working conditions. So you kind of look at that as hope. There may be change and that things may get better. But the market's telling us the exact opposite, that there's likely going to be a crackdown from the government the opposite way, that lockdowns will get more severe. There will be less usage of commodities, less usage of energy, worse working conditions, less productivity. And so you're seeing that play out today in the market. The news cycle may be saying that these protesters are gaining steam. They're getting a lot. They're definitely getting a lot more attention than normal. But the market's saying the opposite, that these protesters are likely going to have more negative, severe consequences on the other side, which brings down demand for a lot of products globally. And so we're watching that very closely. It's not something that will impact us today necessarily. It's not something that we were expecting to be a big news event, but it's something that we feel like bears watching between now and the end of the year and beyond very closely.
Yeah, that was one of the surprises. I mean, let me say this. We have had our eyes on China due to the whole COVID experience and the way they've been handling things, but now it's starting to erupt in a whole different way. And so we've got to watch that. And I thought you did some great research on that. And speaking of research, throughout every week, we have provided through these vlogs, as well as our podcast, our YouTube channel, our social media, Facebook, LinkedIn, Twitter, to provide you all kinds of details and information, because we're frustrated educators. Also, in addition to that, we probably need to emphasize this even more, but we say to people, go back and watch our vlogs and what we were talking about. Ty, I was really impressed today. You brought out research that we have used in previous vlogs regarding the elections. And, people that listen to our blog or forward this to their friends and colleagues get to see what we're looking at and where we think things are going to go. So we're doing a lot of what if scenarios here. So talk about a what if that now has happened.
As we know, the election is mainly over. I'm sure they're still counting ballots somewhere. It'll probably be counting ballots, for a long time. That's just kind of how it goes. But kind of what we're looking at here is a Democrat Senate, a Republican House, and a Democratic president. Now, if you see in this chart, we went over a couple scenarios that were most likely to play out heading into the midterm. This chart is from early November before the election. We discussed that Republican sweep with a Democratic president, or this Democratic Senate, Republican House, and Democratic president were probably the two to play out. The latter played out. As you see here, the average annual performance, this goes back from 1933 when this had this kind of layout in the political landscape, is actually better than a Republican Congress and Democrat president. So 13.6 annual performance, second best, right there, basically tied for first. I mean, that's pretty good. I think that's something to keep an eye on. It's something that played out, kind of how we thought it would. After the midterms, the 12-month following, every year since 1942, the market has been up. That's an average gain of 15%. Now, of course, historical returns don't mean future returns.
No guarantees there, but it's good to look at it.
Yeah, dealing with inflation, a lot of recession talk out there, things of that nature. But I mean, an average 15% gain nothing negative here in the past. I mean, I think we, have a little more upbeat sense when it comes to the political landscape and how that associates with the markets.
Yeah, and that's data that we provided in our blogs throughout the year as we navigated through the volatility of the markets, and we still stick with that. And we're going to be watching things. You can always have a surprise like a China or a Russia-Ukraine situation, as well as other things that can take place in this country. But this is the kind of data we want our clients to know about, that we're looking at in relation to their portfolios and the markets. So with that, we just want to say we hope this has been very beneficial to you. I love this kind of dialogue and information that we've provided, and we hope you do too, to the point that you share it with colleagues and neighbors and friends and family. We hope you had a fantastic, happy Thanksgiving, and we're heading into the rest of the holiday season and year end. As Trey said earlier, we're going to be tracking that consumer spending during this holiday season, and we see some very positive things going into the 2023 year. Throughout the holidays this past weekend, I had people saying, Greg, what do you think the markets are going to do? And my response is, we don't know 100%, but we're going to do everything we can to collect the data, do the what ifs, and see what the possibilities are. So we hope you have a great week. We're going to keep you updated. And thank you for believing in us, and know that every day here at Five Plan Partners, we strive to give our clients better, richer, fuller lives. Thank you.